the witnesses today for joining us. Three witnesses today, plain and simple, determine the financial futures of every American. Equifax, Experian, TransUnion are this country's biggest biggest credit reporting agencies. You have, as you know, and as we've talked, tremendous power over people's lives. The information you collect and put in people's credit reports determines whether people can get a mortgage or buy a car, what interest rates they pay, what credit cards they can get at what rate, whether they'll get insurance, what they pay for it, whether they'll be able to rent an apartment, whether they'll be accepted for a job. All of that, in some sense, is in your hands. These companies are not just keepers of consumer data. They essentially manage, or mismanage as the case may be, Americans' financial reputations. When your reports matter this much with consequences this drastic, it's important that you get it right. It's vital that these reports contain only information that's useful and fair and above all accurate. In 2017, when Equifax experienced the massive data breach, the American public was frankly shocked to find out exactly how much credit reporting agencies are involved in their lives. They don't, no offense, but they don't think about you a whole lot. The company compromised the personal information of more than 147 million consumers, including their Social Security numbers. Millions of people were forced into a crash course on how frustrating it can be to deal with credit reporting companies when they make a mistake. They had to place a credit freeze. They had to request their credit report. They were told to constantly monitor this information for inaccuracies. People are busy enough with their children and their jobs and their lives. They shouldn't have to spend that kind of time because some company they've never heard of screwed up. The data breach affected millions of people at once and got a lot of attention. But that was far from the only case of costly mistakes by your companies. Today, credit reports are still riddled with errors. According to an FTC study, 1 in 5 consumers had errors in at least one of 3 credit reports. 1 in 20 had errors that affected the likelihood of receiving credit or affected their credit rate. More than 200 million Americans are in Experian, Equifax, TransUnion credit reporting system. That means potentially 40 million customers have errors on their credit reports. In a 2022 report, the Consumer Financial Protection Bureau found that Equifax, Experian, and TransUnion routinely failed to adequately respond to consumers with errors in their reports. After this report, the 3 credit reporting agencies instituted some reforms to better respond to consumer complaints about errors on their credit report. It's an important, though long overdue, first step. But errors like mixed files, where the information of a different consumer appears in a credit file, are still far too common. Mixed files are such a pervasive problem that in 2015, 30 attorneys general settled a lawsuit with 3 credit reporting agencies, understanding you were not CEOs then, over this problem. Among other reforms, the credit reporting agencies were required to establish minimum standards for matching criteria and reducing mixed files. It's much more than just mixed up files. Some people, still very much alive, are declared dead. They have their identity stolen, the list goes on. Errors are introduced into this system by what are called furnishers, companies supplying information to the reporting agencies. Debt collectors are some of the worst offenders when it comes to supplying wrong information. CFPB found that even though their debt collectors supply just 13% of the accounts to credit reports, they're responsible for 40% of the disputes in credit reports, 13%, 40%. Americans can be dinged on the reports for debts, in some cases you not even owe. It's not just errors that do not belong on credit reports. Medical debt in particular, I've spoken to each of you about that, has absolutely no place on credit reports. In 2022, just in this country, an estimated 43 million Americans held $88 billion of medical debt on their credit reports. Low-income families, Black and Hispanic households, veterans, older Americans are hit particularly hard. But medical debt can happen to anyone. It doesn't matter if you do everything right. Anyone can get sick. Anyone can get in a car accident. Nothing really to do with your ability to pay your bills, or at least it shouldn't. Medical debt does not correlate with credit risks. It correlates with illness or injury. No one should have her financial future destroyed because of an emergency or a sick family member. That's why I'm asking your companies to stop putting medical debt, period, on your reports. After increasing scrutiny and pressure a year ago, the 3 of you all announced you would significantly change how medical collection debt is reported. One of the major reforms announced is the removal of all medical debts of $500 or below on reports. This is a good step, thank you, but it's also not enough. If you have 1,000 medical debts, you're no less creditworthy than someone with $500. It stems from the same problem. Someone in your family or you got sick or injured. CFPB found that remaining medical debt on credit reports will disproportionately belong to consumers living in majority minority and lower income neighborhoods. Your companies provide tenant screening services, another way you have tremendous power over people's lives, and another way your errors can have disastrous consequences. When tenant screening turns up erroneous eviction filings, people can't find a place to live. And because tenant screening reports aren't as available as regular credit reports, renters may cycle through rejection after rejection without even knowing there's an error on the credit report. After pressing CFPB to address these errors, I was glad to see they and the FTC announce a request for information on how background screening, like tenant screening reports, affects renters' ability to obtain housing. Just yesterday, the committee held a hearing about the challenges Americans face affording housing. It's a highly competitive housing market. Inaccurate data means renters lose out on a home, making things, of course, worse. It's hard enough for Americans to get a foothold in the middle class. The last thing workers should have to contend with are careless mistakes from companies that have too much power over some of the most important aspects of their lives. It's vital that the reports that your companies issue be accurate, not include medical debt, period, and that errors be fewer and correctable. I don't think it's a lot to ask. Senator Scott.
Thank you, Mr. Chairman, and thank you to the witnesses for being here with us this morning. It's such a really important topic, one that we've worked on for the last 5 years of my time in the Senate, making sure that we have access to the best credit we can get based on someone being credit worthy. I think that's a really important part of it. I say that because I look back at my own family's history and back to the 1920s and 30s when my grandfather was growing up in the Jim Crow South, where getting a loan had more to do with your relationships, not to do with your credit worthiness. And so when we move towards a model that allows people to access credit based on their relationships, it can sometimes lead to discrimination. But when we have an objective standard that is applied to everyone fairly and consistently, the nation is a better place. Accessing credit, accessing the American dream through home ownership is more realistic based on your credit worthiness. My story continues in a very similar direction as my grandfather's did. In the 1990s, when I was starting my small business, I would say without any question, I went to a bank and Senator Britt had a conversation with the banker about assets versus liabilities. And at that point, my best asset was a 1990 240SX that had 253,000 miles on it. Not necessarily the definition of an asset, but I tried to use it to borrow some money against it, and the bank rightly laughed me out of the bank. But I did develop a relationship where we had an opportunity to look at my very light credit score. I didn't have much credit at all, and so that works against you when you're trying to start a new small business. And if you need a revolving line of credit, banks are less likely to loan against no assets, the ability to come back and forth to the same institution. So that is a challenge. But the more I worked with the banker to appreciate building that credit score, understanding the principles that are so important to American prosperity, I was able to achieve my goal of opening my first all-state insurance agency with the help of a friend who put some money into the business, as well as a bank that finally concluded that I was an appropriate risk. That situation today manifests in different ways, in that the credit score now impacts your rates in your insurance business. Having been in the business of insurance, your auto insurance, your home insurance, not just your loans, are literally decided by your credit worthiness. And because of that, I think we have to do everything in our power to make sure that as we head towards and continue to make progress on a risk-based method, it takes the nature of subjective nature out of lending that relied only on relationships, reputation, or word of mouth, and in turn created, in my opinion, a fair, objective measure of credit worthiness, increasing access to credit and, frankly, making it more inclusive as well. This is so important because with hard work and responsible financial decisions, anyone can develop and improve their credit score and obtain access to credit in a manner that represents their financial opportunity. increasing taxpayer-backed risk in the housing market as this administration's economic policies push us toward a recession is anything other than equitable. At the same time, the CFPB has the audacity to announce it's exploring new avenues of regulatory overreach on whole numbers of different issues, ranging from data privacy to late payment fees, despite the fact that the agency itself experienced a data breach, exposing the information of more than 250,000 Americans, and then hiding that breach for several weeks. It's amazing how tirelessly this administration works to put dollars on the sidelines instead of in the taxpayers' pockets. And I look forward to getting answers and holding Director Chopra responsible. At the end of the day, if the data that lenders use becomes less secure, less reliable, and predictive, it will simply result in higher rates and fewer loans made to people at the margins of the credit box. People just like me. Yet another example of the Biden administration's policies hurting the people who can afford it the least. However, there is good news. American innovation and free market competition are creating new avenues towards prosperity. As technology develops and lenders are able to use new or alternative sources of data to better predict the risk of default, credit-invisible Americans will increasingly be able to participate in our financial markets, and that's really good news. Common sense and technological innovation has the potential to bring an estimated 50 million Americans with thin or no credit files into the financial system and is a goal I have been working on, as I said at the beginning, for years. My Credit Access and Inclusion Act, the Building Credit Access for Veterans Act, and finally the Credit Score Competition Act, which was signed into law in 2018, are all designed to allow for the use of new, reliable, predictive data in our system. As we push forward with these improvements in technology and new sources of data, which are already showing promise at making our markets fairer and more accessible, we should also consider what guardrails may be needed to ensure responsible growth and consumer protection. I look forward to hearing from the witnesses today on this really important topic and look forward to asking you some questions as well.
Thank you, Senator Scott. The three witnesses joining us today, Mark Beggar has served as CEO and board member of Equifax since April 2018. From March 2016 to April 2018, he served as a member of the board of directors at FICO. Chris Cartwright has served as president and CEO of TransUnion since May 2019. He joined TransUnion in August 2014. Welcome. Mr. Brian Casson served as CEO of Experian since July 2014. He was previously appointed to the board as CFO in April 2012. Thank you all for joining us. And Mr. Beggar, please begin.
Good morning. Chairman Brown, Ranking Member Scott, and distinguished members of the committee, thank you for the opportunity to be here today. I'm Mark Begor, the Chief Executive Officer of Equifax. Since 2018, I've led the transformation of our company to build a new Equifax and a culture that values and supports consumers, customers, and communities. I recognize the important role that Equifax plays in the financial lives of consumers, and I take this responsibility very seriously. Our company's purpose is to help people live their financial best, and Equifax is committed to putting consumers first and helping people access useful and affordable financial products and services in a responsible and sustainable way. We know that every financial first, whether it's a college loan, a credit card, or a mortgage to purchase a first home, can spur positive economic change, and we constantly look for ways to bring greater financial opportunity to more people in more places. Over the past 5 years, we've invested an incremental more than $1.5 billion to rebuild our IT infrastructure to the most advanced cloud technology capabilities available. This is one of the largest cloud investments ever undertaken in our industry and is changing every facet of our infrastructure and our operations. Our new cloud capabilities are allowing us to enhance the accuracy of data and to more effectively leverage our alternative data to expand access to credit while also delivering industry-leading security. We know that one of the keys to responsibly expanding consumer access to credit and supporting a more inclusive economy is leveraging information that is not traditionally included in the credit report. And we're focused on offering innovative solutions that can bring increased visibility to underserved consumers. For example, we recently became the first in our industry to provide a new mortgage credit report that combines utility and cell phone data with traditional credit data. The majority of American adults have at least one utility or cell phone bill in their name, and using this additional data in a mortgage underwriting could raise the credit scores of as many as 2.4 million consumers by an average of 30 points, moving them into a higher score band and potentially enabling them to either get approved or to receive more favorable mortgage interest rates. In addition to our efforts to expand access to credit, Equifax is taking strong steps to be more consumer-friendly at every touch. We've invested over $75 million to improve the overall experience that consumers have with Equifax. We are ensuring that our written communications are in plain language. We have added tools like video clips to our website to help consumers navigate the dispute process, and we've made it easier for consumers to both manage their disputes online and track their disputes throughout the process. We are committed to correcting errors on consumer reports quickly and transparently, and we're working with our industry colleagues to limit errors from occurring in the first place. Another element of our focus on consumers is ensuring that we maintain the most accurate data possible. Even one single error on a consumer's credit report is one error too many. It's a personal priority for me that consumers trust their credit reports to contain accurate and complete data. To strengthen our accuracy program at Equifax, we are driving initiatives in 3 key areas. We are streamlining our dispute processes and rewriting our consumer communications to use more plain language. We are implementing automation to more quickly identify errors in data before it goes on the credit file. And we're working more closely with our furnishers to communicate issues that we find and correct them going forward. While I'm proud of our progress, there is more we can and will do. We are deeply committed to putting consumers first, and that means ensuring that we are providing lenders with accurate information so that consumers can get the credit that they need. And we continue to focus on our leadership in data security and to foster a culture where data security is central to our team's DNA. We've built one of the world's most advanced and effective cybersecurity programs, and our security capabilities exceed all industry benchmarks. We believe that transparency, communication, and collaboration deliver stronger security, and we continue to actively engage with our customers, policymakers, and other organizations regarding the challenges and opportunities in cybersecurity on a daily basis. While we still have more work to do, I'm proud of our progress that we've made over the last 5 years. Our resolve to achieve our company purpose to help people live their financial best and put consumers first has never been stronger. Thank you again for the opportunity to share some of the key priorities of the new Equifax and for your dedication to your constituents and American consumers.
Thank you, Mr. Begor. I appreciate your being here. Mr. Cartwright, you're recognized for 5 minutes.
Chairman Brown, Ranking Member Scott, distinguished members of the committee, thank you for this invitation to appear. My name is Chris Cartwright, and I am President and CEO of TransUnion. TransUnion is a global company headquartered in Chicago and one of 3 major credit reporting agencies in the United States. We have nearly 5,000 employees in the U.S. and over 12,000 worldwide. TransUnion's mission is to help people and society through information, to ensure fairness for consumers, and to assist businesses in identifying underserved communities and managing business risks. The credit reporting agencies are the backbone of the modern consumer credit economy. We play a key role in the efficient and stable functioning of the nation's financial system. We serve as clearinghouses and record keepers, and we help consumers gain access to credit quickly and efficiently. We do not make lending decisions. We provide information that helps consumers obtain credit and helps lenders in underwriting and establishing credit terms. Our credit reports help more than 254 million consumers per year obtain important financial products, allowing them to achieve their personal goals through affordable credit. Today's consumers expect near instant access to credit. We help make this possible by providing an efficient and reliable way for lenders to assess consumers' willingness and ability to repay their loans. Ultimately, this system enhances quality of life and strengthens the American economy. We also play an important role for the lending community and for preserving financial stability. We help banks and financial institutions of all sizes more accurately manage risk, and we have seen in the past several months, ensuring lending institutions have the data to understand and mitigate risk is critical to the overall health and resilience of the U.S. banking sector. At the core of TransUnion's business is a commitment to data accuracy. Data accuracy is the fundamental underpinning of the entire credit reporting system. We must get it right. A strong and accurate reporting system benefits consumers, businesses, and the economy. TransUnion has led the industry in building a system that helps consumers quickly address any errors in their credit reports and work directly with furnishers to expeditiously resolve any inaccurately reported items. Through our efforts, our turnaround time in addressing consumer disputes is now approximately 9 days, well below what is required by law. We understand the great responsibility we have in stewarding data that touches the lives of nearly every American. Financial inclusion is a key pillar of our company strategy. We're proud to be industry leaders in promoting expanded credit access through alternative data. Alternative data sources, such as rental and utility data, provides opportunities for people to build credit profiles quickly and accurately. We believe alternative data is really a story of economic fairness. If this information were reported at scale, it would substantially increase credit access for millions of Americans. We also know the real impact credit reports have on consumers' lives. We are committed to getting it right every time. Since I became CEO of the company, TransUnion has undergone a transformation focused on improving the consumer experience. Among other things, during this transformation, we have partnered with our peers at the outset of the pandemic to provide consumers with free weekly credit reports. We are continually investing in our operations to build a best-in-class dispute resolution infrastructure to make sure our data is as accurate as possible and consumers' experiences are seamless. We recently removed all paid medical debt from credit files, and we made changes that will remove more than 70% of all unpaid medical collections from credit reports. Senators, we recognize that partnering with policymakers is essential. We appreciate the work of this committee, in particular Chairman Brown and Ranking Member Scott, for your leadership in helping to make the credit reporting system stronger. We want to continue to build on our successful history, and we will continue to work with Congress and our regulators to provide consumers with the tools they need to realize economic opportunities. Thank you, Senators, and I look forward to answering your questions.
Thank you very much, Mr. Carr. Mr. Casson, welcome.
Chairman Brown, Committee Member Scott, and members of the committee, I am Brian Casson, CEO of Experian. I appreciate the opportunity to discuss the important work Experian does for the benefit of consumers, lenders, and the U.S. economy. Let me begin by stating why credit bureaus exist, how consumers benefit, and how our work provides underlying stability to the entire consumer credit ecosystem. Credit bureaus accurately compile consumers' payment histories reported to us by individual creditors so that all lenders can use this data to make sound underwriting decisions. Good lending decisions mean fewer defaults. Fewer defaults reduce the cost of credit and increase the availability of consumer credit across the economy. Because credit bureau data does not include demographic factors such as race, color, religion, and gender, it also helps lenders make non-biased lending decisions in compliance with the Equal Credit Opportunity Act. Experian fully understands its obligations to ensure the information we hold on consumers is secure, to make credit reports accurate, and provide a method to correct data that is easy for consumers to access and use. Experian supports this committee's goal of enhancing the accuracy of credit reports, improving consumers' experience through the dispute resolution process, and making fair and affordable credit available to all communities. Experian has invested heavily in systems and processes to improve data accuracy, and we continually strive to reach 100% accuracy. We work with approximately 10,000 lenders and other data contributors across the spectrum of consumer lending, including credit card, auto, mortgage, retail, and fintech. And we have stringent requirements and monitoring programs in place to ensure that our furnishers are submitting accurate information to us. An important component of accuracy is the consumer's right to review their own credit report and correct errors. With millions of free reports and scores in the ecosystem monthly, Consumers have easy and free access to their report information, including through annualcreditreport.com, which provides free weekly reports to consumers. Experian has a free online dispute portal, including a mobile-optimized website and app. Consumers can also easily reach us by telephone or mail. Mr. Chairman, studies suggest that as many as 50 million American adults are unable to access fair and affordable credit, either because they have very thin credit files or because they are completely credit invisible. We also understand that many consumers, particularly minorities and lower income individuals, are often underrepresented in the credit reporting system. This is an area where Experian has been at the forefront with the launch of Experian Boost in early 2019. Boost allows consumers for the first time to safely and easily opt in to having proven payment information like utility, cell phone rent, and video streaming services included directly into their credit report, which can improve their credit score. In January 2022, we launched Experian Go, a groundbreaking feature to help consumers who are credit invisible to establish a financial identity with Experian so that they can begin building a credit history. Since its launch, more than 12 million consumers have come to Experian Boost to improve their credit score, and 130,000 consumers have used Experian Go to establish a financial identity. The results are notable. We estimate that consumers have been able to access billions of dollars in credit post-Boost, including credit cards, car loans, and mortgages. And Experian is also providing free access to free credit monitoring, free credit scores, and financial education to more than 65 million US consumers. Mr. Chairman, I'm very proud of the work our employees do every day to help and empower consumers. We would like to continue to work with this committee to identify other ways that we can improve the system for consumers. Thank you for inviting me to testify, and I look forward to answering your questions.
Thank you, Mr. Kessin. We'll begin the questions with Senator Smith of Minnesota.
Great. Thank you, Mr. Chair and Ranking Member, and thanks to all of you for being with us today. I really appreciate it. Black, Hispanic, and Native American consumers tend to have lower credit scores than their white and Asian counterparts, and this isn't necessarily because they are less creditworthy. It's because they are more likely to be among the 45 million Americans that fall outside the mainstream credit system. Those that are considered, I think I heard one of you use this term, credit invisible or unscorable, because they don't have enough traditional credit information in their files to generate a conventional credit score. So, Mr. Cartwright, maybe I'll direct this question to you. How can we use alternative data, such as rental history or utilities or cell phone or internet payments, to help address this inequity within the credit scoring system?
Well, Senator, first, thank you for the question. It is a hugely important issue and an opportunity for our industry to improve the manner in which we serve consumers and the American financial system. I agree with the points that you've made. In my mind, this falls under the umbrella of alternative information that can be used to reliably establish a consumer's ability and willingness to repay debt. There are tens of millions of consumers in the U.S. who have thin credit files or are credit invisible. We know that information such as rental payments, utility bills, telecommunication data, et cetera, provide strong signal and prediction of a consumer's financial management behavior. And we would like to gain access to this information at scale and create a pathway for these traditionally underserved groups to access the mainstream financial system.
So the barrier is getting access to the data?
Yes, Senator, that's correct. Each of the bureaus has a degree of access to this information today. However, there is no requirement that the current custodians of this information furnish it to the credit reporting industry. If there were regulation or legislation that required that, we would be able to get comprehensive access to this information and accurately add that to the consumer's credit file and improve financial inclusion dramatically. Again, we have a history of such innovations in our industry, And we have seen that each time we expand the inclusion of accurate and truthful information, tens of millions of consumers can now engage in credit.
So medical debt medical debt that has gone to collections affects 1 in 5 Americans, a group that, again, is disproportionately comprised of elderly folks, veterans, low-income people, Black and Hispanic patients. So I am grateful for the step that you've taken over the past year to minimize the impact of medical debt on these group of folks. However, as you acknowledged when you announced your most recent changes, medical debt is generally not taken on voluntarily, right? So based on that, patients don't always have the ability to choose providers or to shop around for their care, and the true cost of care might not be readily available, or they might not know what that is up front. So, Mr. Begor, maybe I'll direct this question to you. Taking all of that into consideration, what value does medical debt really have in determining credit worthiness, and do you think that it should be included at all?
Senator, we agree with you that the medical debt situation is very complex. Our hospital systems, the billing systems that they have, the insurance systems are some of the most complex out there. You know that the industry, the 3 credit bureaus, made a proactive move to, number one, exclude all debt for a year, medical debt, to give consumers a chance to sort that out, and then second, to exclude medical debt below $500, which eliminated about 70% of the trade lines. So we thought that was a proactive step going forward. And then we're doing more around ensuring that the medical debt that is contributed is accurate inside of the credit file.
Okay. As I understand it, when you announced that medical debt under $500 would be exempt from credit reports, that you noted that this applies to what is the initial report balance. But depending on the care that folks receive and the providers that take care of them, you could end up with multiple bills that exceed $500. How would you address that?
Well, same thing, Senator. I think it's something we can look further into. We agree with you the complexity of medical debt is something that needs to be addressed, and we thought the move on $500 was proactive. I think there's more we can do to look at the issue.
I would encourage you to do that. Thank you. Thank you, Mr. Chair.
Thank you, Senator Smith. Senator Scott's recognized.
Thank you, Mr. Chairman. Senator Smith, I have something called the Credit Access and Inclusion Act that allows for more information to be added to the system voluntarily, and Mr. Casson's talked about and Mr. Cartwright's talked about. So I'd love for you to have a conversation with you about the legislation. I do think that there are 2 ways for us to actually see more access to credit, and one way I think is flawed and likely will lead ultimately long-term to less access because you create a less reliable scoring system. And I think we're seeing that in part from the FHFA Director Thompson, who's departing from risk-based pricing on individual loans purchased by the GSEs, creating a perverse incentive structure that will penalize borrowers who have worked really hard to improve their credit or save for their down payment. And so when you look at ways to water down the credit score in order to create more access, I think ultimately you destroy the very system that I talked about that I think needs to be objective, that needs to be based on the credit risk itself. And there are ways for us to make sure that specifically minority borrowers who are more often than not going to be renting a home, not owning the home, based on the fact that 41% of African Americans today own their homes, which means that ultimately 59% do not. So if you're not including the rent payment, if you're not including the other beyond credit card payments, the utility payments, the phone bill, the mobile phone bills, there are other ways for us to make sure, and if we're doing those things and adding them in, we are creating a more fair yet objective system. And Mr. Casson, I know that you talked a little bit about Boost in your opening comments. My question to you is, how's it going, number one? Number two, do you find that the accuracy of the information that's being inputted is consistent with the same level of accuracy that allows you to still have a fairly objective system?
Well, thank you, Senator. Yes, since we launched Boost, which was in 2019, we've had over 12 million consumers add additional trade lines to their credit reports. And we do this through a fairly simple process. We gain access to their checking account. It's consumer permission, so the consumer opts in to do this. We look for these trade lines and we add them to the credit report, and then we immediately rescore them. What we found is that over half of the consumers that have done this have seen some fairly material increase in their credit scores. So it has been hugely beneficial. It is We've worked with the industry to ensure that that it works and that the information is valid to be included. So the scoring systems work. We've worked with all the scoring companies. So we believe this is a very effective way of actually helping people who have thin credit files, and ultimately also for people who have no credit history. So very proactive step. We did take a further step, Senator, more recently with the launch of a product called Experian Go, which is actually targeted at people who have no credit history, and so they can establish an account with Experian for the first time. And these kind of initiatives, we think, are incredibly helpful at addressing that large population of people who have limited or no access to credit, Senator.
Anyone else want to comment on that topic?
Senator, I agree with Brian, as well as your points around more data results in better decisions. And we have some large databases of non-traditional credit data. For example, we have a database of 220 million American cell phone payment records and utility records.
Yes.
And we've recently taken that data and added it to our mortgage credit file. And that drives the predictability of the consumers, particularly those at the lower end of the credit space that have less trade lines. So if you're adding in someone's cell phone bill that they pay every month, it's a predictor that they're going to pay their financial bills on time. And from that new product, we think as many as 2.4 million consumers will see a 30-point lift in their credit score by adding those non-traditional data elements in. We're going after rental payment data, as you suggested. Very complex to collect,
Indeed,
as was already pointed out. But we have a big priority around adding non-traditional data sources to expand access to credit.
And I'm running out of time, so I'll just say this. The use of objective standards is so critically important. And I see this move across the country that somehow we're going to make the lives specifically of minorities better by eliminating objective standards in everything, in education, in credit scores. And that, to me, is insulting as an African American, that the only way for me to be competitive is for you somehow to eliminate the thresholds. That's ridiculous. I can't think of anything more ridiculous than that. I'd say this on this topic. There's lots of things more ridiculous than that, but not on this topic. I also hope that you all are spending a lot of time investing in financial literacy as a path forward to helping people understand and appreciate the necessity. What you look like on paper might become the most important single factor in how you live your life in the future as it relates to being creditworthy. Thank you. Perhaps I'll continue while I have.
Thank you, Senator Scott. Thank you. I will take my 5 minutes now. Thank you for your response to Senator Smith. It was a start, but inadequate, but I want to talk to you more about medical debt. I appreciate that your commitment to increasing access to credit overall. I appreciate the $500 threshold that you're doing, that you're not putting in the reports up to $500. I appreciate the first year of not reporting, and I appreciate that if the medical debt's paid, it's not on their credit report. But I want to talk a little more about that. CFPB just released a report that found for consumers with over $500 in medical debt, with under $500 in medical debt, removing medical debt increased their credit scores by 32 points. That when medical collection is removed from credit reports, the total amount of available involving credit increased by over $1,000. My question, starting with you, Mr. Begor, will you commit to removing medical debt above $500 from credit reports?
Senator, I think we made a very proactive move with the $500 decision the year,
Yes.
as well as and we're focused on accuracy of medical debt, and it's certainly something we'll look at in the future and collaborate with your office.
You're not willing to commit right now?
We'd like to collaborate with your office on it, Senator, and look at it closely.
Okay. Mr. Cartwright, same question.
Well, thank you for the question, sir, and thanks for acknowledging that the progress that the industry has made in this difficult and sometimes controversial issue. Senator, I would agree that we should continue to analyze this issue and determine what is the best threshold for including medical debt within the credit record. I think we have to acknowledge that at some level, medical debt could become a burden for a consumer to incur even more debt. I think the best outcomes is when all the players in the credit reporting system, be it the bureaus, the banks, consumers, and certainly this committee collaborate and analyze the information and let the data lead us to the best outcome.
So back to the question to Mr. Begor, you are not willing today at this hearing to commit to no medical debt, taking all medical debt off over 500. You're not willing to commit to that today.
Senator, what I am willing to commit to is to apply considerable resources working with this committee to analyze the data and help determine what is the appropriate balance to strike for the financial system.
Okay. Mr. Casson, the same question to you.
No, thank you, Senator. It's the same response, Senator. I think we've taken very proactive steps. We agree this is a really important issue. It's also a complex issue. And I think we will commit to working very proactively with your staff to see if we can make any further steps. It does involve a lot of stakeholders. I think it goes beyond just any decision that the three credit bureaus could make themselves.
Okay, the decision, the working with our staff, the best way to do that, I will reiterate, is a better answer to that question. But I mean, you all know that medical debt, I mean, you've essentially said that. It's not predictive, it has no place, and you've sort of ceded that it has no place in credit reports. The three of you own Vantage Score, as you know. 2022 Vantage Score announced it no longer will include medical debt as part of its credit scoring model because medical debts, quote, are not predictive of a consumer's credit worthiness. That's why I'm urging today and will continue to urge, as Senator Smith urged, that you take all medical debt off credit reports. Let me do one other question, then I'll turn it to Senator Britt and then Senator Warren. Tenant screening reports go beyond just credit information. Mr. Cartwright, this question is specifically for you. They include eviction filings, criminal histories, and just like credit reports, these tenant screening reports can have errors. The catch is renters can't see these reports, as you know. So to get an apartment, you're forced to allow landlords to look at reports on you that you cannot even see yourself. TransUnion's a large, of the three of you, you play the most central role in this. TransUnion's a large provider of tenant screening reports. Should a tenant have the ability to see a copy of their tenant screening report, actually see, not just provide consent when a landlord is using it to decide about renting to them? Mr. Cartwright.
Senator, TU is committed to making sure that tenant screening data is accurate. The information that we receive from the several sources that you referenced is generally authoritative and it's very accurate. We've also invested considerable sums in the algorithms and analytics that match this information to the correct consumer. When errors are identified in the system, we are proactive. We report this information to the furnishers of that information, and we allow the record to be corrected. Senator, this screening information, it plays an important role in enabling tenants to get housing opportunities. The data is also an important tool to help property owners expand that opportunity, but also to protect their tenant communities. So we are committed to full and fair access to the information as provided under federal law, but we also take our obligation to make sure the data is as accurate as possible very seriously.
So you're not saying every tenant should have the ability to see a copy of the screening report?
Senator Chairman Brown, consumers are able to see the information that's reported against them, and they're able to dispute it under the FCRA. And again, when errors are identified, we report it back to the sources of that information. So I agree with you that transparency in this process, just as in financial trade lines, is hugely important.
So are you saying that, I mean, you're good in your answers. Are you saying that tenants now will see the reports, they'll be able to know if they're accurate, they'll be able to get them cleaned up when they are applying to rent somewhere?
Sir,
ahead of time, while I mean, you know what's happened here, Mr. Cartwright, that tenants will, they get turned down, they don't really know why. They get turned out of second place, they don't know why. The potential landlord has seen the reports, the tenant hasn't. How do we fix that? Then if you're not if you're not going to more directly, aggressively, proactively get these reports in the tenant's hands. So one, they understand. Second, they may see errors that they can clean up and then get an apartment that they weren't able to get.
Well, Senator, it's certainly important that the data is accurate. We spend a huge amount of resource to make sure that it is. It's also important that it's transparent. Under the FCRA, if a tenant is turned down, if a consumer is turned down for credit or a tenant is denied a housing opportunity, they need to know the reason. And once they're given that reason, they have an opportunity to access the information.
But do they know the reason
correct it.
now? Do they know the reason when the potential landlord gets the credit report, sees something that's disturbing to them, they don't rent to this potential renter? Is that something you're going to fix so these tenants, these prospective tenants can see that information? I understand you're working to make them accurate. I believe all three of you in our meetings and now that you're trying to do in a complex world. But these tenants, I mean, person by person, is this going to be remedied?
Well, Senator, it's difficult for me to speak for all the practices that are out there in the market. I do believe that that landlords are responsible for communicating the reasons for denying access to housing to applicants, and we'd be certainly.
But they don't. You hope they do. You think they're responsible, but they're not. In many cases, they don't tell the tenant to just say no. Correct?
Well, again, it's difficult for me to speak comprehensively about the practices out there. What I can tell you is that we believe that it should be a transparent process, and we're, again, happy and willing to commit the resources to work with you to review the rules of the road and refine regulations as appropriate.
Okay, well, I hope then the best first step you can take is to support the provision in our Bipartisan Eviction Crisis Act to clarify that tenants should be able, in fact, under law, to see their own tenant screening report whenever landlord's using that report to decide about whether or not to rent to them. So we will come back to you about asking for your very public support for the Eviction Crisis Act. Senator Britt of Alabama.
Thank you, Mr. Chairman. Good morning, and thank you to all three of you for appearing before this committee this morning. I want to speak on a subject that Ranking Member Scott brought up about credit invisible individuals. Both the CFPB and many of your research, actually, Mr. Casson, your research team as well, indicates that there's around 26 to 28 million Americans that are credit invisible. Actually, in Alabama, this is personal to me. 1/5 of Alabamians, according to the CFPB, are either credit invisible or have a thin credit file, and for lack of credit history. Research indicates that this is predominantly in low and rural consumers, and they are the ones that are fitting into this category. One of our bipartisan goals on this committee is to responsibly increase access to financial institutions and to credit. I want to ask each one of you, given that many of these individuals do not have traditional credit histories, what is your plan to help more Americans no longer be credit invisible or to actually develop their credit history? And we'll just go down the line, and since we are short on time, if you can keep it as concise as possible, I'd greatly appreciate it.
Thank you, Senator. We're 100% aligned with your goal, and it's already come up in the hearing around expanding access to credit. It's a priority of Equifax's, and we have large databases that are alternative data outside the credit file. For example, we have records on cell phone utility payment records for 220 million Americans, and we've rolled out a new product, a new mortgage credit file that includes those data elements that will expand credit scores by including those more non-traditional elements.
And are you seeing that help more people?
For sure. And we're working to bring more data in. Rental payment data, for example, the 44 million Americans that rent every month. That's very attractive data, very predictive data that will improve their credit score. So adding that data is a priority of ours.
Thank you. Mr. Cartwright.
Thanks again for the question, Senator, and I agree with you. It's a hugely important issue, and in my opinion, it's probably the single biggest issue that this committee could work on to expand financial inclusion to the mainstream system. One point I would like to highlight for the committee is that TransUnion and the credit reporting industry at large adopted what's called trended credit information over the past several years. And the difference is that prior to trended credit information, we took a snapshot, a point in time view of a consumer's credit information to calculate a score. Now we look back over history, as much as 3 years of data. That allows us to include consumers who may have fallen off the credit file. As a result, the industry can score tens of millions of consumers that we couldn't previously and score with greater accuracy, which is important to bank safety and soundness. I agree with Mr. Begor that we've got to invest in alternative data. We also at TransUnion have a considerable amount of non-traditional credit information that we use in our scoring algorithms, and it expands access to the financial system for American consumers.
Excellent. I hope you'll continue to invest in that.
We certainly will.
Mr. Casson.
Thank you, Senator. This is a hugely important issue for the industry, and it's a hugely important issue for Experian. We've been incredibly proactive on this topic. The first thing that we did some time ago was to make access to Experian credit reports and scores free to any consumer. And we now have over 65 million consumers that access those products directly from Experian. So they can go at any time, get access, and to lots of products which give a lot of education around how reports and scores are calculated and how people can improve those. But we've gone further than that, Senator. We've introduced some specific products which really go to the heart of this issue. The first is called Experian Boost, which I mentioned in response to Senator Scott's question. And that's really a service which enables consumers, entirely free and entirely optional, to actually add those additional trade lines to the Experian credit file so that they can be included in their credit assessment. And as I said, over 12 million people have actually done that, and many of those, more than 50%, have actually seen some substantial increase in their credit scores as a result. So we think that's a hugely positive development. The second thing we did was introduce our newest product called Experian Go, which is actually aimed at those consumers who have no information on the credit file whatsoever, so that they can add these trade lines and establish a financial identity for the first time. And this is a hugely important step in trying to address this issue. So together, I think all of the actions that we've taken by making all of our products available to consumers for free, by introducing these products which are specifically geared towards targeting this issue, I think we have been the most proactive on this topic, and we will continue to do so to work towards that.
I would agree you have, and I want to commend you for the work that you've done, and I hope all three of you will continue to make sure that you're intentional in this effort. We have to make sure that more Americans have better opportunity to build their credit file. Additionally, I want to double down on what Ranking Member Scott said about financial literacy. It is critically important, and if each of you will report to my office what you are doing within your community to help us promote that across the country, I would greatly appreciate that as well.
Thanks, Simran. Senator Tester is recognized from his office. Perhaps. Do we know?
I appreciate it very, very much. Many Montanans have reached out to my office with complaints about difficulties receiving much-needed loans because their credit reports are frozen or suspended. With little face-to-face assistance from the CRAs, folks feel that they're being held hostage by the CRAs. So for all of you, how will you help consumers quickly lift freezes on their credit reports?
I'll go first, Senator, I guess in alphabetical order here. We agree with your point around it's super important to give consumers access to their credit report. As I mentioned, Equifax has invested over the last number of years $75 million to improve that access. We're also expanding the education on our website in order to have consumers better understand what a credit score is and what a credit report is and how to improve your credit score.
So just before we go to the next one, but for the freezes specifically, are you doing anything to help consumers lift the freezes?
We are, Senator. We're making that process more streamlined. At Equifax, we have an online app that is called Lock and Alert, where a consumer can lock their credit file and then automatically unlock that credit file. That's a free product. So it's definitely a priority of ours to make it easier to lift a freeze when a consumer puts it on there.
Okay. Next.
Senator Tester, thank you for the question. I agree. This process needs to be quick and seamless for consumers. Today, there are two flavors of the process. A consumer can enact a credit freeze, which is enabled legislatively across various states. It also takes a bit more time to freeze and unfreeze one's credit through these processes. TransUnion has also invested and innovated in an app in a credit lock product where consumers can lock and unlock access to their credit instantaneously. And that's what we're striving for. We're striving for a very seamless consumer experience.
And Senator, at Experian, we make it available free to consumers to freeze and unfreeze their credit reports. We've actually just revamped that product. It's available through a mobile app. We believe it's very easy to do and should be quite intuitive for consumers to do it. And there is assistance to consumers if they're having any difficulty. So this should be a really easy process for consumers to do now.
I want to talk about data breaches for a second. They occur, and they occur in all sorts of different arenas where folks get their identity stolen due to a data breach. For you, Mr. Bigor, can you give me an idea on what's being done to help folks who have had their identity stolen due to a breach?
Yeah, we have a process where a consumer that has an identity issue, they can freeze their credit file if they've been a victim of an identity breach. Obviously, they have access to free credit reports and can work with our team to really manage their credit exposure if they've been a victim of a data breach event.
So I don't know about you guys, but I get these cell phones, and I get phone calls at the most inopportune times. Sometimes when I'm in the middle of asking important people questions, although it hasn't happened yet today. And they're from telemarketers. They're from folks who want to sell me something that I don't really give a damn if I buy it or not. I should be contacting them. They shouldn't be contacting me. But nonetheless, it occupies a lot of my time, and it's a real genuine pain in the neck, or maybe even a pain somewhere else. So it is my understanding that folks who are trying to buy homes in Montana have expressed some frustration with an influx of advertisements and loan officers calling them directly after they pull their credit reports. Is this being done because you guys are selling this information to third-party entities without their consent, or do they give consent, or are you not selling the information at all to third parties that are basically in the business of trying to make money, but contacting people that, quite frankly, would contact them normally if that was the case? It's for all of you.
So, Senator, I can go first. I think the product you're referring to is called Mortgage Triggers. It's been around for quite a long time. Consumers who do have the opportunity to opt out of that. What happens is when consumers apply for a mortgage, they get the opportunity to receive other offers. It was actually introduced quite a long time in conjunction with people in the mortgage industry. And over a long period of time, people have actually benefited significantly from getting better offers when they're in the process. I think
they have the opportunity to opt out of that if they.
That's correct, Senator. Yeah, that's correct.
That's perfect. Is that a big deal, or is it happen just with a phone call, or how's that done?
No, it's very easy to do, Senator. It may not be known by all consumers, but it's a very simple process to do.
How about the other two?
If you go onto the Experian website, or I'm sure it's true in the other bureaus as well, it's actually a relatively simple and straightforward process to do.
Good.
Senator, I'd like to echo Mr. Cassin's comments. We have similar functionality, opt-out functionality through our different digital products, and they are easy to use. I think I should also mention that TransUnion has some unique capabilities in this area where we can display the brand of an incoming phone call, and we can identify whether that phone call is a so-called trusted call. And we're rolling these solutions out in the fall.
Okay, appreciate that. Mr. Bigger?
As Senator, we have the same capability for a consumer to opt out from that marketing.
Okay. Appreciate it, guys. Thank you very much. Thank you, Mr. Chairman.
Thanks, Senator Tester. Senator Fetterman of Pennsylvania is recognized.
Thank you, Mr. Chairman. And gentlemen, all today. And I want to be clear, I'm not putting you on the spot here. Just had some research that my team has come up with, and it's like there appears to be a systematic bias in the credit reporting. About 5,000 adults, about more than half of Black Americans report having low or no credit score. Hispanics, 41%, whites, 37%, and Asian Americans, 18%. And again, is that something that perhaps might sound accurate to you right now?
Senator, there's a large population, too large in the United States, that have no credit score. Our math is about 20 million Americans are not in the formal credit file. There's another 60 million Americans that have very few trade lines that are generally not scorable. So it's a large population. A big priority of ours is to use alternative data to help them get access to credit and develop a credit score and a credit report.
So you don't believe that there is an issue then?
No, Senator, I agree completely. It's one of our priorities to focus on access to credit. We think it's a big issue, and it's one I know the committee's focused on, and we're 100% aligned with the issue, and we're focused on using alternative data to address it.
Okay. And well, is there any trends or patterns that you noticed about race and credit reports at all?
Well, Senator, perhaps I can answer that. The credit reports are not allowed to include any information, protected characteristics, race, religion, ethnicity. So the reports are completely blind to those factors. I think what we're talking about here is the issue you've discussed, which is one of underrepresentation across many communities. And we do agree that's an issue. And as we said in answers to question Scott, and that we believe that we've been very proactive in trying to address this issue, and we believe there's more we can do, and we'll be very focused on making sure that we can improve access for everybody across the United States.
Thank you. Thank you. According to the FTC, active duty service members and their families are nearly 3 times more frequently victims of digital theft than other U.S. adults. What are you able to do to protect to the credit for all military families, both the active duty and non-active duty, including the National Guard, Reserve, and Readiness, so saves a higher than average risk of financial fraud, particularly cybercrime?
Well, Senator, perhaps I can answer on behalf of Experian. We make our credit reports and scores free to all active servicemen and women and their families. So it's entirely accessible to them all the time.
Senator, TransUnion does the same, and I think it bears repeating that at the beginning of the pandemic, as an industry, the credit bureaus went from providing consumers with 1 free credit report a year to 1 free credit report per week. And I think that's critical because we want consumers, and we want certainly active military personnel to be able to access their credit information and to benefit from free monitoring products.
Anyone else?
And Senator, the same with Equifax. We have a program where the active service members have access to that information, and it's a priority of ours to support them.
Okay. And my last question, transgender and non-binary computers face a myriad of credit reporting problems if they change their names, including fragmented reports among other issues. These problems can be devastating to the consequences. What steps have any of you or agencies taken to prevent credit reporting problems for members of this community?
Well, Senator, if I could start. The issue you raise is a very serious issue, and it's why, at TransUnion and we in the industry, we match consumers to credit records using a wide variety of criteria. There are often name variations. We've also got to look at social security numbers and phone numbers and a variety of addresses. And again, a broad range of criteria that ensures a high degree of matching accuracy.
Similar, Senator, at Equifax, we're focused on making the process when a name change needs to take place to make that seamless and easier for that individual to complete.
And Senator, just to complete, it's the same at Experian. We do similar processes.
Thank you all for all of your questions. Thank you.
Thank you, Senator Fetterman. Senator Warren of Massachusetts, when she sits down, is recognized for 5 minutes.
Thank you, Mr. Chairman. So the three of you who are testifying here today are the CEOs of the largest credit reporting bureaus in the nation. Your companies determine the credit worthiness of just about every person in our country. And you make money by collecting and selling information about an individual's past success in repaying their debts, the amount of money that they owe, and other factors that you claim predict the likelihood of repaying their debts going forward. So credit reports that you produce have big consequences for people's lives. If someone's credit report drops by, say, 25 points, they could have a rental application turned down, they could be charged a higher price for a car loan, they could pay more for insurance, or they could even miss a chance at a new job. So it is really important that the data is right. Last year, over 100 million Americans had medical debt. CFPB research shows that medical collections are less predictive of consumers' future delinquency rates than non-medical debt collections. And research by FICO finds that medical collections that have been paid, this one really gets me, the ones that have been paid are even less predictive of consumers' credit worthiness than unpaid medical collections. So, Mr. Begor, you are the CEO of Equifax. Do you agree with the research showing that medical debt collections are not as good at predicting the likelihood of default as other kinds of debt like car loans, mortgages, and the like?
Medical debt is a very complex topic, Senator. A lot of medical debt isn't taken on willingly by consumers, so we appreciate the complexity of the medical debt as a complex
that's not the
process.
question I'm asking you. I understand that it's complex. The question I'm asking is its predictive value compared with, say, car loans, mortgages, and paying the rent.
It still has a predictive value, but the Senator knows that we took a proactive action to exclude medical debt under $500, as well as excluding
I
paid
understand what
medical
you've
debt.
already done. I'll ask my question for a third time. Is it less predictive than other forms of paying your bills?
It's still a predictive element in paying bills.
Is it less predictive than other forms of paying your bills?
I don't have that information available to me.
You don't
how
have
predictive
that
it is.
information available? Are you kidding me? You are the head of one of the biggest credit reporting agencies in the country, and you don't know the relative predictability of one of the major forms of debt that you report on?
Senator,
Really? You expect me to believe that?
Senator, as I said, we still believe it's predictive. We're continuing to
That was
look at
not
it.
the question. If you can say that it is predictive, then I am shocked that you don't know how predictive it is compared to other forms of debt collection. Look, the reason that medical debt is a poor predictor of credit worthiness is our medical system is a mess. Most hospitals charge you one price, they charge insurance companies another. So medical bills are often a moving target. Bills are routinely sent to the wrong party. Often a patient can't even figure out what it is in terms of supplies or services that they're being billed for. Studies, which I assume you would have read, show that as much as 80% of medical bills contain errors. The CFPB found that, quote, many medical bills reported on credit reports are disputed, inaccurate, and not owed, end quote. Some debt collectors have even stopped reporting medical bills to your companies because the data is so bad that they worry that they may be violating federal consumer protection laws by reporting it. Last year, your companies made changes in how you handle medical debt, and those changes were good, but you fixed roughly about half the problem. Nearly half of the roughly 38 million people with medical debt on their credit reports will be left in the same position as if your companies had done nothing. The CFPB has said that it will continue to assess whether unpaid medical debt should remain on Americans' credit reports at all. So, Mr. Begor, let me ask you this. If the CFPB were to conclude that data on medical debt is so full of errors that it doesn't belong on credit reports, would you support all credit reporting agencies removing it entirely?
We're certainly prepared to collaborate with the CFPB.
That's not the question I asked you. Do you want me to repeat the question?
No, that's not necessary, Senator. We'd certainly support that.
All right, thank you. Mr. Cartwright, what about you? If the CFPB concluded that this data was so problematic that it doesn't belong on credit reports, would TransUnion remove medical collections from consumers' reports?
Senator, we would work with the CFPB.
That's not the
and
question
follow
I asked. I'm not asking you whether or not you want to work. I'm saying if they conclude that the data is so problematic that it does not belong on credit reports, would TransUnion remove those data from consumers' reports?
Senator, to be clear, the CFPB is our regulator, and if they were to direct us to remove the remainder of information, because the actions we've taken voluntarily have removed 70% of consumer debt from the record, but if they directed us to do so, we of course would comply.
All right, but I asked you a different question. The question I asked you is just a factual one. If they conclude that the data are so bad that they should not be listed on credit reports, I'm not asking whether or not if they go ahead and put an order in place. If you had that information, Mr. Begor claims not even to know how bad medical debt reporting is. If you had that information from the CFPB, would TransUnion stop reporting it?
Senator, we are committed to accurate and complete credit reporting of predictive.
So if the Federal Consumer Protection Agency said these data are so inaccurate they should not be on credit reports, would you then remove them from the credit reports? It's a simple question, Mr. Cartwright. If you had this information from a federal regulator, would you use that information in order to get rid of this data, take it off the reports?
We would certainly act appropriately, and Senator, in the circumstances
I'm
that you
asking
outlined.
you, you're the CEO. Is it appropriate then to just take it off?
Yeah, I find it difficult to believe that the CFPB wouldn't issue guidance on the matter if that were indeed
So you're going to
the
wait
results
for
of their
it to
analysis.
be ordered. That's what you're saying? You don't do anything unless you're ordered to do it?
What I'm saying, Senator, is that we are a data-driven
Mr.
analytic
Casson,
company.
I'm past my time. Let me turn to you. Would you support removing medical collections
Well, thanks,
from
Senator.
Experian's credit report if the CFPB concluded that the data were so problematic they should not be on credit reports?
I understand the nuance of your question. I think first point I would say is if of the CFPB directed to us, of course we would comply with that. If the CFPB concluded that it was so problematic and that the industry also agreed that there wasn't an issue in removing that data from credit reports, then we would do so too. But I think it is a complex issue, Senator, and I think it needs to be looked at in the broad.
You know, I apologize to the chair for running over, and I understand that the credit reporting agencies are just the last link in a very problematic chain of actors that hospitals and health systems and insurance companies and medical credit card issuers are all profiting from a business model of bogus and even illegal healthcare charges. And I'd like to see those CEOs in front of us as well. But credit reporting agencies are the ones who turn all of that bad data into real pain for American consumers. You're the ones who cost them real money, more than just those bills, in every part of their lives. And it is time to start holding every link in this chain accountable, and that includes the credit reporting agencies. Thank you, Mr. Chairman.
Senator Britt is recognized for a second short round of questions, I believe.
Thank you. As you know, we had a hearing yesterday over the challenges of our housing industry. Many of the affordability issues in our housing industry come from record high inflation that are crushing American families across the board. Rising prices have cost a typical household here in the U.S. over $10,000 since President Biden took office. I agree with Ranking Member Scott that we must expand home ownership to more Americans. Home ownership is especially central to families seeking to build intergenerational wealth and achieve their American dream. Mr. Biegor, you talked about different ways, additional and alternative data that you all were using to help in this area. Can you talk specifically about how you're working to assist more creditworthy families to accomplish the goal of homeownership?
Thank you, Senator. We're very aligned with that goal around expanding access to credit and taking the credit invisible and moving them into the formal financial environment through the use of our alternative data and our technology. And one great example is a new mortgage credit report we rolled out a few weeks ago, where we're adding cell phone utility payment data that will expand that credit file and result in as many as 2.4 million subprime consumers increasing their credit score by 30 points. So we're focusing on using alternative data to expand access to housing, the housing market.
Excellent. I hope that you'll continue to do that across the board. As you know too well, there have been increasing trend of pressuring credit reporting agencies to remove certain data from their reports. The accuracy of data you collect is used for fair pricing and access to credit for hundreds of millions of people. If we continue down the path of removing all different types of data from credit reports, I'd like for each of you to speak to some of the potential consequences that that might create. Mr. Cartwright, go ahead.
Well, Senator, if I can begin the discussion. At the outset, Ranking Member Scott talked about an era in financial services in this country where loan determinations were influenced by relationships, by community standard, by prior practices. It has been an enormous innovation to the benefit of consumers to have comprehensive and accurate and objective information reported at scale to the reporting agencies. So now the decisions are data-driven and they're unbiased. I feel like having a truthful and comprehensive record at the foundation of lending decision is critical. Nobody wins if the data is inaccurate. Nobody wins if the data is somehow cherry-picked or gerrymandered for a particular outcome. Our role is to be the custodians of this information, to ensure that it's accessible to consumers, and to ensure that they've got a fair process to review and dispute the information if it is inaccurate. But more information and information transparency, it drives better outcomes for consumers.
Mr. Casson?
Yes, thank you, Senator. I think we touched upon this issue, and I think a perfect example would be, for example, Experian Boost, where we've given millions of consumers the opportunity to add additional data to their file. And the result of that is actually that they get access to better credit and more affordable credit. So really, the solution to this issue is to provide more data, not less, more accurate reflections of how consumers have repaid obligations on time, and to give consumers credit for that. I would add, Senator, that we have also a lot of examples from across the world of different systems, and systems which have less information generally perform much, much poorer than systems which have more information. In the US, we have one of the most competitive and dynamic credit economies in the world. Lots of countries seek to emulate that. And where we have less information, it's generally worse outcomes.
The more information we have, it limits and mitigates the risk.
Correct.
Correct. Okay. Mr. Biegor?
Senator, I would agree. More data results in better decisions for U.S. consumers, and complete and accurate data is what our financial and credit ecosystem is built on. And I would agree with your comment as well as Brian's that the U.S. credit system is the envy of the world. With the scale of our information and the depth of information that we have and the access to credit that consumers have. But there's still so much more we can do around adding alternative data to really help those consumers that are not in the formal environment and move them into it.
Absolutely. Well, yes.
And Senator, if I could add one last point. Adding rental payment to the credit files at scale would materially drive home ownership in this country. If a consumer can make their rent payments consistently, they can make their mortgage payments. And if they qualify for a mortgage, they can start to build generational wealth, as you pointed out.
Absolutely. And in conclusion, if there are potential CFPB announcements coming down the pipe, I hope that those will be done in accordance with the notice and comment process that's required by law. And I hope you will all consider reliable, risk-based data, including all types of debt. As you know, they're important to the work that you do. The more data that we have, the more people have access to credit. Thank you for being here.
Thank the three of you for being here today. I appreciate your testimony, your commitment to work with this committee. The committee will ensure that you all do better, as you promised, and produce more fair and accurate credit reports for consumers. This is I believe, the first time ever that the CEOs of all the, or representatives of the three large credit reporting agencies have been in front of this committee, or I believe in front of Congress at all. This has been helpful today. This will not be the last time we do this. We talked a lot today about financial inclusion and access to credit. I want to reiterate that one important way to achieve this goal is to remove all medical debt from credit reports. You heard every Senate Democrat in this room ask you about that with passion, about how important that is. I don't think your answers were very direct. I think you know that medical debt is not predictive. We talked about a whole lot of reasons for that. I think you know that when medical debt's removed from credit reports, according to CFPB, the total amount of available revolving credit increased by over $1,000. You know what that means to low-income people, what you just said, Mr. Cartwright, about people creating generational wealth. If medical debt is removed from a car accident or unexpected illness, as illness usually is, you know this will provide more people an ability to buy a home and build that equity and build that generational wealth. I know you, and I could see from your answers, you intuitively, all three of you, understand what that can mean. I mean, you don't meet personally a whole lot of low-income people, I assume, in the United Kingdom or in Atlanta or Chicago. CEOs rarely do. Senators rarely do, unfortunately. That's part of the problem with this place. But you know you will make the lives of a number of moderate low-income people who are struggling better if you remove the medical debt. It increases credit scores by 32 points. That clearly is significant in the lives of a lot of people. If you want to increase financial inclusion and critical access, I again urge you, as so many up here did, to remove medical debt from credit reports. For senators who wish to submit questions for the hearing record, those questions are due 1 week from today, Thursday, May 4th. To the witnesses, please submit your responses to questions for the record 45 days, no more than 45 days from the days that you receive them. With that, the committee is adjourned. Thank you.